Okay.
All right, so welcome. This is Bill and Rakesh. We're going to talk a little bit about Bitcoin today. Welcome to the call, Rakesh.
Thank you, Bill.
Good to have you here. I know we're in completely different time zones. He's almost on the opposite side of the planet from me, so I'm getting ready to go to bed. He's getting ready to wake up. But we're all looking at the same chart here. First, let's start off with the news. We got a pretty big dip from the latest bounce. You know, it went from 19.8, almost 19.9 over here on GDAX. Can you see my screen okay?
Yes, I can see it, Bill.
So I'm looking at the day chart, and you can see that it bounced pretty good. I mean, on this string here, you can see it went down all the way down to 10, and then it did a bounce and started to look like a pretty decent recovery yesterday. You know, it went up to 16. You know, it went up to 16, and then it did. You and I had a private conversation, and you said be ready for a sell off at each one of the high points, and so that's what it looks like it's doing right now. You know, we're now down to 14.3, which is definitely different than what was happening just 8 days ago. You know, 8 days ago we had a pretty predictable run up, and now we've got looks like a pretty predictable run down. So, what do you think's happening?
I think with Bitcoin futures coming into play, most of the traditional investors who are there, what we do is we wait for a bounce before shorting it. Around the 16,000 mark, I expect some resistance to start. But this would only remain if the bears are able to push prices down below, let me see, around 13,500 levels. If they are able to push prices down below level, I think Bitcoin should again retest the lower levels of 11,000. So right now the bull and the bear, they are playing their game, and bears are having an upper hand as of now. So this is what I anticipate will happen in the next few days. The bearish, the negative play that we have in mind, it will be invalidated if the bulls are able to push prices above yesterday's intraday high. That should be close to $16,200 if I'm not wrong.
Right. Well, it's definitely a surprise for me because I actually expected, because it wasn't leaning toward traditional traders. Now that we do have a completely different crowd into the marketplace, it's starting to act a little bit more like stocks, right?
Yes, that is the major difference that I see because of Bitcoin futures coming into play. So all the big pocket players, the investors, the large traders, the short sellers, because till now we did not have any major short sellers. So the only way to make money on Bitcoin was on the way up. Now the short sellers have an opportunity to make money on the way down as well. So there will be a big tussle between the bulls and the long people who want to buy Bitcoin and make money, and the other side which wants to sell Bitcoin and make money. So now the real trading starts.
The real trading begins, and now it's for the brave of heart. Need to hold on. You still think I'm with the playing around that they're doing with the market? I still think that we're in for a pretty strong 2018.
As of now, Bitcoin is in a strong uptrend. The current pullback is only a pullback. It is still not in any kind of a downtrend. So as long as the uptrend remains, we are in for a good bullish, I would not say a similar kind of a move of 2017, but we should see a good up move even in 2018 as long as the uptrend remains.
Right. So one of the things I'd like to ask your question about, SegWit2x, there's a new group of people. It's actually not the same group of people. I don't know if you know much about it. They were thinking about doing a split and then forking Bitcoin again as of tomorrow. Normally when an announcement like that comes out, it's a big boost for Bitcoin because everybody wants the free coin. Do you know anything about that?
I don't know the nitty-gritties of the fork, but what I know is during the last two times that we had a fork, Bitcoin prices had rallied after the fork. So if the same thing happens this time, we should see 20K very soon. If it doesn't happen, then there'll be a change from the previous two situations. That means that things are changing in the Bitcoin world and we need to take notice of it.
Yeah, I think after a while, a fork is just another word, and it doesn't mean anything anymore after we get so many.
Yeah, true.
So I'm looking forward to a potential. It's got a pretty nice drop in the last hour. I'm looking for hoping to see some recovery through the evening, and then I think no matter what happens, once we'll probably see resistance there again. Gain a little bit of bounce money.
We should. On the charts that I have on my screen, I see a trend line support that is there close to 14,000 levels. Sorry, that should be a nice place for a bounce.
All right, so that's good for today's analysis. I'd love to ask you some questions. So I'll probably split this into two videos, and what I want to do now is ask you some questions basically for the newbie. Most of my customers are brand new to trading, so some of the stuff that we just talked about, they don't even know the difference between a green bar and an orange bar, right? So
Okay.
let's talk a little bit about what they're looking at when they look at a chart. So I use two different charts. One of them is Bittrex, and the other one's GDAX. But for GDAX, for most of these guys, when you're trying to look at trading, I usually look at the candle view, which means here's the difference for you guys if you can't tell the difference. A candle view versus a line view. There's a line view, and then the candle view shows that. And candle seems to make more sense to me when I'm looking at a view. One of the things that people ask me pretty often, so I'm going to have you explain. When you see these little candles, what are these little tails down here that are floating above and below the candles?
Yeah, these little wicks that are there, both at the bottom and the top, those are the prices which are not within the opening and closing of the trading day. In the sense that pick any candle bill on it on the chart. Any one candle which has a wick on the lower end.
Yeah, it doesn't let me zoom in or anything.
Yes, please.
Yeah, I can't. It won't let me zoom in or anything. This is the only view.
Okay, okay. It doesn't matter. Just keep your cursor on one particular candle. I'll just tell you.
Okay.
All these orange candles that are there, all these orange candles have an opening price which is higher than the closing price. In the sense, in that particular time frame, whether you choose it for an hour or 4 hours or a day, the market fell. Now, when you have the opening price, that is where the orange point starts, and where the market closed, the orange point ended. But during the day, the market went up and went down, and that is what forms the wicks on the candles. Is it clear or is it not clear, Bill? I'm not sure.
That makes perfect sense. So this is just
newbie might find it difficult. We might have to show one more candle, Bill, because it's difficult for somebody who's not traded to understand it very clearly.
So
we'll take a green candle this time, Bill, so that they know the difference.
How about this little green candle that has
that's nice. That's perfect. That's perfect. On the this particular green candle that Bill is pointing to, we have an opening price of $15,061.76. That was the opening one. The closing price was $15,171. Now, those 2 points, they form the candle. But if you watch the candle, the lowest point of the day was 15,000. So that is what forms the wick. That is the opening price of 15,061.76. Lowest point was 15,000. So that is the wick that we see on the lower end. The high was $15,245. So that was above the closing of 15,000.
So what you're saying is during this 15-minute time period, it traded anywhere from as high as 15,245 and as low as 15,000. But the closing and end prices were the actual candle, and the bouncing in within that 15-minute time frame shows the wicks.
Correct.
So here's something else that people don't really pay much attention to. And here's one called the EMA 12 and the EMA 26. Mm-hmm. What are these little lines that you get to turn on and off when you're watching a chart?
These are the moving averages. These smoothen out the price action of that particular time frame. If you see the 12 EMA, that will smoothen out the price of the past 12 candles. If you pick the 22 EMA, that will smoothen out the price action for the past 22 candles. So for usually what we find is 20 and 13 are the values that people feed. You can feed any particular value depending on the particular cryptocurrency that you trade, because each cryptocurrency has a different support and a resistance pattern. We need to find it and you need to fine tune it.
And maybe in the future we'll talk a little bit about when we start looking at trends, why moving averages are important, and what they actually show us some potential anticipations based on whether it's moving toward or against different moving averages. But for now, we'll just keep it at that, just as a definition. And the last thing I'd like for us to talk about is the depth chart. And we can actually see when we look at a depth chart. I actually show people this pretty often, but what can we learn from looking at a depth chart? Let's say we get this what we call the wall. We got this big wall, which is the green. That means they're buyers. The buyer wall is somewhere around 14.5, and the seller wall we see is a lot shorter. So when you look at a wall that looks something like this, what are you generally going to expect?
No, Bill, I'm sorry. I'm not very conversant with the depth chart.
Okay.
We don't use it. I don't use it. I only completely rely on the patterns that form on the traditional chart.
The only thing I use the depth chart for, and this one's not a really good example because it's not really showing. Usually, when there's a super clear wall, we have an anticipation of the psychological sell points, but sometimes it's crystal clear. Like this one's at 15.5. This wall takes quite a big jump. So I show people. It doesn't always follow through. The wall changes as you get close to it. Mm-hmm. But there's a cliff point, and so I show people, look, there's a very likelihood that as we move to 15.5, that's where your bounce is going to happen. And it's a pretty good predictor, but not always. So with that, and then lastly, there's these bars down here that actually talks about volume. These little volume bars.
Yeah, important ones.
So when we see it trending down and the volume bar is really high, like this one, like right now we got a downward trend, and we got a volume bar that's huge. I mean, it's bigger than anything we've seen for most of the day. What does that normally tell us?
Panic is building up, and the trend on the downside is picking up some steam. Usually, this will be followed by some more downtrend. Then we will have a big, huge candle. This is more of a doji candle that we talk. We'll have a big, huge candle with a big volume bar. That would usually be the end of the panic, wherein everybody would be selling. That would generally form a bottom. But when initially when the downtrend starts and the volume picks up, that means we are in for some downtrend.
Exactly. So I hope that helps you guys. That's just trading 101. One of the things that we talked about in the last call, and I think the last call is really important. You guys need to understand that when we talk to you guys, we're not giving you any trading advice. We're giving you information. There are some safe trading practices, and we'll talk more and more about that. I have for the last almost a year been making at least 10% or more every week on my trades because I'm watching certain patterns. over the last 4 or 5 weeks, those patterns have actually changed. They've changed significantly. And so I don't trade as often. And until I see a clear pattern, then I recommend in most cases just have a strong hand and hold out, because it's still doing better than almost any stock that you can buy. And I still expect Bitcoin to do well next year, even though we've had a couple of days of downward trend. So I recommend you guys learn from as many people as you can, make some wise decisions, trade smart, don't mortgage your house for Bitcoin. And we'll see you guys in the next one. Thanks for your help, Rakesh, and we'll see you on the next call.
Yeah, thank you, Bill.